Hey guys, welcome back. Today we are going to see one problem from rights issue. Rights issue from corporate accounting, and this is one of the easiest concepts from corporate accounting. If it comes in exam, this will be the easiest area to score 7 marks with this problem. Okay, so what we are going to learn in rights issue is nothing but share issued to existing shareholders, usually at a higher price, usually at a lower price than the market value. Okay, so com- company is giving the rights to the existing shareholders at the discounted price. This is not the exact word, but this is just for understanding discount price. Okay, so if market value is 100, company will issue at 40, 50, or for 30 or some price company will issue. So what we are going to learn is, with this problem, what's how the rights issue is affecting the market price. Rights issue affects market price, and what's the actual value of the right in general parlance. That's it. So this is very easiest problem we can score 7 marks with this. So let's quickly read this question out for. I'll quickly read this question out for you. Okay, the company is planning to raise funds by making rights issue of equity shares to finance its expansion. Okay, they are planning to source funds for expansion, and the company is existing capital of the existing share capital is 50 lakhs. Okay, they have a existing share capital of rupees 50 lakhs. Share capital rupees 50 lakhs, right? Most cases that the face value would be 10 only, and we are assuming that. So if the face value is 10 rupees, what would be the total number of shares, total equity shares, which is 5 lakh shares, right? Okay, the market value of the share is rupees 42, and the company offers shareholders the right to buy 2 shares at 11 rupees. Okay, right price is 11 rupees, and the ratio what the rights issuing is 2 is to 5. For every 5 shares we are issuing 2 shares. Okay, you are required to calculate the theoretical market price after rights issue. So if the company is issuing 2 is to 5 shares, so what would be the actual right share numbers? 5 lakhs into 2 by 5, which is 2 lakh shares, right? 2 lakh right shares, rights are issues. Okay, so for the 2 lakh shares the price is 11 rupees. So what would be the theoretical market price after rights issue? So this is the formula we have to understand, that the theoretical market price after rights issue is, the formula is very simple: number of shares before right into market value of shares before right plus right shares into right issue price divisible by total shares after rights issue. So what they are saying out of this is totally the past scenario. Okay, this is the upcoming scenario or current scenario. Okay, so current and latest share volume, this is the number of shares. Okay, so by the impact of this right shares, how much value has been how much change that is happened in the market price. That's what we are going to find out. Okay, the number of shares before right issue, which is how much, 5 lakh shares, right? 5 lakh shares we have before right issue, and the market value of that 5 lakh share is rupees 42, right? Plus right shares, how much volume is right shares, 2 lakh shares, right? We found out, and the right share price is 11, right? So total shares after right issue is 7 lakh shares, right? So 5 lakh into 42 plus 2 lakh into 11 divisible by 7 lakh, which is rupees 33.143. Okay, this is the theoretical market price after rights issue. Then the value of rights, what would be the value of rights after issuing the, sorry, value of rights is not after issuing. So value of rights is there is a change happened in the market value, no? So what's the difference between the past and present scenario is what the value of rights is saying. Okay, the past price is rupees 42. Theoretical market price after right issue is, no, this is the this is the direct value of market price after rights issue. If we are issuing the rights issue, what will be the scenario in future? So that's what we have estimated here. So the estimated, the theoretical market price after rights issue is rupees 33.143, which is 8.857 rupees is the value of the right. Okay, fine. Then what else has been asked? So we have done with this. Then percentage increase in share capital, which is 2 lakh divisible by 5 lakhs. 2 lakhs is the new shares, existing shares. How much has been increased? We have to find it out like this, and the percentage would be 2 lakh divisible by 5 lakh into 100, which is 40% of increase happened in the existing share capital. So that's it. So just I want to give a quick recap of what we have done. So the question has said that the existing, 1 minute, the existing share capital is 50 lakhs, and the face value we have assumed it as 10 rupees 10. Okay, the total equity shares is 5 lakh shares. How? 50 lakhs divisible by rupees 10. So 5 lakh shares we have estimated. So the market value of that 5 lakh shares is rupees 42, and the right price the company is willing to issue is 11 rupees, and the ratio of issuing the shares is 2:5. So we found the ratio, which is 2 lakh right shares we are going to issue, and the theoretical market price after rights issue is number of shares before right into number of into market value of that shares before right, and the right shares into rights issue price. So, and what's the total volume of shares after rights issue is the denominator, and we have totaled it, and we found out the theoretical market price after rights issue, and we found out the value of rights by using the previous market value and the after rights issue price, that is 8.857 is the value of the right, and the percentage increase in share capital is the 2 lakh divisible by 5 lakh into 100, which is the 2 lakh is the rights issue quantity, and the existing share volume is the 5 lakh. So that is a 40% surge happened in the share capital due to rights issue. That's it. Thank you.